In this video, we're going to talk about how to hire your child to save on taxes, teach them to save, give them work experience, and get them on track for retirement and to save for college. But before we do, if this is your first time at our channel or you haven't subscribed, click on the subscribe button at the bottom. My name is Travis Sickle, certified financial planner, helping you reach your financial goals. In this video, we're specifically going to be focusing on hiring your child to save on taxes and getting them to save for their financial future, whether it's in a savings account or retirement plan or a college savings plan. Now, that doesn't mean that you can't hire your child in other situations, but we're specifically going to focus on reducing your taxes. So there's a lot of moving parts when you're thinking about hiring your kids, but don't worry, it's well worth it. The first thing that you're going to have to look at is your taxes. And that is not only with the IRS for the federal taxes, but also with your state taxes. And then with the child labor laws, you're going to want to look at the Department of Labor or the U.S. Department of Labor for the federal labor laws, and then also your state's labor laws. What we won't cover and you're going to want to look on your own are industry-specific standards, if there's any laws or regulations in a specific industry, and your state's taxes. But going through the tax side and the labor side will put you in the right direction in hiring your child to save on taxes and help them with their financial future. Now, the IRS has a whole page dedicated to not only hiring your family members, but also to hire your children, specifically the parents hiring their own children. And if you go to the SBA's website, the U.S. Small Business Administration, they also have a page outlining 5 reasons to hire your child. And the only reason I'm pointing out this article on the SBA's website is so you can see that hiring your child is not only recognized by the IRS, the SBA, and all the other government agencies, but they're also pointing out the benefits. But we're going to start with the United States Department of Labor, because this really shows us whether or not you can hire your child. Now, there is an exemption specifically for parents hiring their kids. So here's what the exemption is for the Fair Labor Standards Act. And it says that youth younger than 16 years of age working in a non-agricultural employment in a business solely owned by the parents or by persons standing in place of their parents may work any time of day for any number of hours. Now, this next sentence is really important because it says exactly what the child cannot do. And it says, however, parents are prohibited from employing their child in manufacturing or mining or in any of the occupations declared hazardous by the Secretary of Labor. And if we head over to the prohibited occupations for non-agricultural employees, and I'm going to leave a link in the description to all of these pages so you can click on them and read in further detail. But this is stuff that's outlined, such as the manufacturing or storing of explosives, driving a motor vehicle or being outside helper for a motor vehicle, coal mining, forest firefighting. I mean, this is seriously dangerous work that I would expect that nobody would want their kid to be anywhere near. So this is the list of things that you cannot do even with the exemption for hiring your own child. And I would hope that you're not having your child redo your roof, because that is just dangerous. Now, as you're going through the labor laws, it's important to pay attention to the exemption. The exemption is if you're hiring your own child and you're 100% owner of the business. Now, the business entity can only be an LLC, a single member LLC, or if it's a partnership, both partners must be the parents of the child. You can't be in a partnership with somebody other than the parent, because that doesn't work. That is not part of the exemption. So both parents would need to be the partners of a partnership. And an S corporation doesn't qualify. While there is a loophole for getting around it, directly working for an S corporation or a C corporation would not apply to the exemption to save on taxes, which is what we're going to look at today. And as you can see again on youthrules.gov, I am under 14. Kids that are under 14 can give valuable experience working, but there are limits to what jobs they can do. Now, these jobs are limited only if your child is going out and working for somebody else. Because again, you could see the exemption here works for a business owned entirely by your parents as long as it is not mining, manufacturing, or any of the 17 hazardous occupations, which is what we just went through. And again, here's numbers 1 through 17 on the hazardous occupations that even if your child works directly for you as the parent, they cannot do. So now if you figured out that your child is employable under the labor laws or the federal labor laws, you still need to look at your state's labor laws. Now it's whichever one is more stringent or more strict is the one that you're going to go with. So if your state is more strict, then you have to go with your state's labor laws. But if the feds are more strict, then you're going to go with the federal labor laws. So I'm in the state of Florida, so I just pulled it up so you can see it. And it says the minimum age, minors of any age may be employed. But again, it depends on what they're doing. Now here you can see the same exact exemption or directly for their own parents or guardians during the hours that they are not required by law to be in school. So that's the exemption for the state of Florida, that if they're required to be in school, they cannot be working while they're required to be in school. But other than that, they can be employed by the parent. So now let's get into the tax side of it so we can figure out what the benefits are for you and the child. So the benefits from a tax perspective, according to the IRS, is if they're under the age of 18, they don't have to pay FICA tax. So FICA tax is the 7.65% that the employee pays and then is matched by the employer at the same rate, 7.65%. And that combined is 15.3%. That is not required if you're hiring your child if they're under the age of 18. And if they're under the age of 21, they're also not subject to FUTA or federal unemployment taxes. And if you also want to check publication 15, family employees, this section is for child employed by parents. And we can see it right here. It says aren't subject to Social Security and Medicare taxes. So that is FICA. If the trade or business is a sole proprietorship or a partnership in which each partner is a parent of the child. And also you can see right down here, I highlighted it, aren't subject to FUTA tax. Now here's where it gets really interesting. When your child is working, they can have their own tax return. Now they're not required to file if they fall under the standard deduction. For 2020, that standard deduction for somebody that's single, which would be your child, is $12,400. So that means if they earn up to $12,400, that they don't have any federal taxes. And because you're employing your child, their income is a deductible expense on your business. So let's say, for example, that you're in the 22% tax bracket. If you pay your child $10,000 over the course of the year, their taxes are going to be zero because the standard deduction is at $12,400. But if you're in the 22% tax bracket and you didn't pay him that amount of money, that means you would have paid $2,200 in taxes on your own tax return. So this is just one way that you can help reduce your taxes while still helping your child save for their future. So now that we've reduced your FICA, FUTA, and federal withholdings, the next thing that you want to do is look at the documentation. Now you want to prepare a job description, you want to have an offer letter that your child signs, and you want to make sure that you're withholding the correct amount of taxes. Now in this case, they could be exempt from federal withholdings, but you still want to fill out your W-4. And if we go to the W-4 for 2020 and we scroll down to the directions, we can see what qualifies for an exemption from withholdings. So if you had no federal income tax liability in 2019 and you expect to have no federal income tax liability in 2020, then you can claim the exemption. And to claim the exemption from withholdings, certify that you meet both of the conditions that we just talked about above by writing exempt on Form W-4 in the space below Step 4C. So let's scroll right up, and Step 4C, if you just write right below that, exempt, and then have your child sign it and just keep it for your records. And one last tax point that we want to talk about is your state unemployment. Now, you're going to want to go look at your state to see if they're required to withhold on state unemployment taxes. But for the state of Florida, which is where I am, employment that's not covered by state unemployment, and we can see it right here, services performed for a son, daughter, or spouse, or by children under the age of 21 for their father or mother. When the employing unit is a partnership, an exempt relationship must exist to all partners or there's no exemption. So it's the same for the federal taxes. So it's the same for SUTA for the state of Florida as it is for the IRS and the federal taxes. And this exemption does not apply to corporations. It's the same exact thing. Now, the next thing that we want to take a look at is the pay. You want to make sure that it's not only a reasonable job that they can do, but also at a reasonable wage. So you also want to document this. And a good way to do that is just to go ahead and run a Google search on the average pay for whatever occupation that you're going to have your child do. So I did a quick search for kid models. You can see right here, according to parents.com, it's $150 an hour. Now that seems excessive because if you check the Bureau of Labor Statistics, you can see that the median hourly wage for a model was $13.63 in May of 2019. But it did go up to the top 10%, earning $26.75 per hour. Now, just like all your other tax records, you just want to document where you're finding the information. So if you do get audited, just like you would for any other audit, you want to keep your receipts. This is the receipt to determine that you paid your employee, which is your child, a fair wage and not too much. So now the next thing that we want to talk about is where to put this money. Now, what you can't use this money for is things that you're expected to pay for as a parent. But what you can do is you could put the money into a Roth IRA for the child because this is now considered earned income. Now, for 2020, the Roth IRA limit is $6,000. So you can put up to $6,000 as long as that is their earned income. So whichever is lower. So if it's 6,000, that's the lower number. That's the Roth IRA contribution limit. Or if they only earned, say, $4,000, then that would be the max contribution that you can put into the Roth IRA. Now, you can also put this money into a 529 college savings plan for their own benefit. So not only are you saving for their future college, but you're also helping reduce your taxes and, of course, keeping your child taxes basically at zero. If you pay them more than the standard deduction, or if they earn more than the standard deduction, then they will have federal taxes. And the last point I'm going to make when doing this is you want to make sure that you're handling this like you would any other employee. You need to make sure you have all the correct paperwork, all the correct documentation, just like you would any other employee, and keep proper records. So you can use this strategy to help reduce your own taxes, but at the same time, setting your child up for their financial future. If you have any questions or comments, leave them in the comments down below. And if you've enjoyed this video, be sure to subscribe and leave your comments down at the bottom.